Good morning. Today is Tuesday, February 2nd, 2011. This morning I'm saying game on. And by that I mean it's kind of like when you were little kids and you used to play stickball in the street. And you'd sit there and you'd have to wait for the cars to go by. And once the car went by, it would be game on again. So that's kind of what we're seeing here with the situation going on in Egypt. The market has sort of put that on the back burner for now. They've kind of gotten through the initial stages of what's going on over there with the political protests. And the market's starting to decide, you know what, hey, this maybe isn't such a bad thing. Not only is it not a bad thing, but it's potentially not as dangerous a thing as we thought. And that's what we saw happening on Friday last week was the major risk aversion going on that people put on just because they didn't want to go into the weekend long risk assets with the uncertainty going on surrounding what was happening in Egypt. So now that the situation is becoming more fluid and people are starting to see exactly what's happening, it's encouraging risk again. And what we're looking at here is I'm looking at a chart of Aussie USD. All right, you can see Aussie's higher versus dollar, roughly 1%. We're back up over parity, all right, which broke right here. Now, in Australia, they had their rate policy decision earlier this morning, and they kept rates steady at 4.75%. And the comments that they came out with were a little bit dovish, but probably not as dovish as the market would like to see. And by that I mean, they have this massive flooding going on there, so they can't raise rates at this point in time. But I think they are a little bit concerned about inflation. And the RBA governor mentioned that the reconstruction efforts, that's actually an increase in demand because now you have to build more. He said that he didn't think that was going to affect inflation that much, but it remains to be seen because if inflation's already high, you add any little excess incremental demand, and that could really change the game there. So the market's okay with where the Aussie is right now, and as you can see, it's responded once it broke out of its short-term resistance here around 99 and 88. It's then gone higher up above parity here. All right, so what we have this morning is we have a little bit of a risk-on scenario going. We have stock indexes around the world are higher. Stock futures here in the U.S. are higher. We also have oil prices, which are now giving back some of the gains that they've had from the Egyptian situation and the potential concern over supply shocks due to Egypt's control of the Suez Canal. So that's what we're looking at here. But also in Australia, we had housing price indexes. They came in a little bit higher than expected as well. So that's adding to the Aussie push here. Now, just want to show you as well, we have some unusual Japanese yen strength here. As you can see here, yen is higher just about across the board. All right, even against, well, actually Aussie's higher there, but we've got Kiwi yen is also a little bit lower. Now I'm just trying to get a beat on why yen is so strong today, and the only thing I can say is that perhaps there is a shift going on of reserves, meaning money that moved into the dollar because of the Egyptian thing is now moving back to the yen. So it could be just money flows. I couldn't see any news out there, but you know what, this actually, if I'm looking at this little candle right here on the 2-hour chart, that's if this thing can continue to form as a hammer down there, that could be a pretty juicy candle to think about potential reverses. Let's just go back and take a look here and see if there's any support and resistance out there that we want to take a look at. So looks like 81's a near-term bottom. This thing looks like it's going to continue to march slowly lower, so I'd be a little bit careful with that because it seems like we're back to where we were before the Egyptian thing, and that was dollar weakness. And you can see here we've got the euro higher versus dollar. I'm just going to go back to the half-an-hour chart to get a little bit more granular. All right, you can see the dollar, euro's stronger than dollar. Looks like we had a little bit of a cup and handle formation here, which it's not perfect, but just giving you an idea. Here's the two rims of the cup. There's the bottom, and it kind of pulls back a little bit before you get the handle that goes higher. Well, they say that the length of the cup could be the potential added to the handle. So if we're down at 35.80 up to the top of the rim, which is 37.40, all right, that's roughly 150 pips. So if we add 150 pips to 137.40, then we could get up to 139, which 139 is an area that I've identified on the you see, I think this is on the daily chart here. I just want to run the Fibbo. Don't shoot me today if I am wrong with where this is, but Yeah, this is wrong. Where did I do this from? I'm gonna have to come back and take a look at this. This may be a fib level from earlier in the year on a more long-term basis. But I had 139 pegged as an area that we could see as a target, and then some potential resistance. All right, so just some quick news out of the Eurozone. In the Eurozone, they had PPI figures came in a little bit higher than expected, but we had unemployment change in Germany that came in better than expected, and overall Eurozone unemployment rate is actually down. They're at 10%, which, if you consider the unemployment in some of these countries with debt crises, upwards of 20%, that's actually not too bad of a number. So that's kind of what we're looking at with the euro. Just want to show you the pound. The pound today, not really doing a whole heck of a lot, but you can see the dollar weakness in the pound. All right, and we can see right here, once we solidified and broke over that 160 area, we've gone higher. Home prices in the UK, while it's showing that it's lower in the year-over-year number, the month number, home prices didn't decline as much as they had hoped. So we still have the potential for inflation on tap there in the UK. I think I saw a report that came out that said that they're expecting to raise rates at least 125 basis points this year, and that has to do with the inflation that they have there, despite austerity measures that they've taken. All right, so that's what we're looking at for right now. Lastly, we have a little bit earlier in the morning, we have for dollar 10 a.m. we have the ISM manufacturing numbers, that's a pretty important figure, and that could be a game changer here. I'm just want to look at the euro again. Let's go back and let's look at this on a 5-minute chart. I just want to see if I can make some sort of silly little projections here for where ISM is going to be. So perhaps, we could see euro trade higher up to, say, 137.80, 138, with this number coming out, which at that time could potentially reverse it and get us a pullback to right around these levels where we are now. So we're going to have to see. Obviously, keep an eye on it, see what the number is. If the number comes in better than expected, then that could mean that this is good for risk taking, but there's also the dual paradigm going on that sometimes economic figures are actually good for the dollar, which is a little bit different from last year. So overall, we have signs that the global economy is improving, which right now with the Fed's QE2 policy means that we should see some dollar weakness. So that's what I'm looking at for today, folks. Good trading to all.